In the meantime, the read on this from Market Watch's Rebecca Walser, and we've got Scott Shellady over at the CME. You know, as bad as it looks, guys, when we look at a 286-point hit on the Dow, it had been well over 400 points, so we paired a lot of those losses. I'm wondering, though, how this carries on here, when it looks like both sides, certainly in the China situation, are getting increasingly, stiff in their positions. And Rebecca, I'm reminded that the Chinese today said they don't like the American attitude, the bullying attitude. We can endure this. We'll deal with it. The Chinese government talking about a 2-year reprieve in taxes for some of their big software companies to absorb the pain they're going to feel from these tariffs. I mean, they're preparing for an outright trade war.
Yeah, and I think that they think that maybe if they outlast 2020, they might have to deal with President Trump. So that's in their minds as well. But you know what, Neil? We don't like to pick winners and losers on the U.S. side, but that's exactly what China does, exactly what you just said. They're willing to invest a lot in private investment and the industries that they want to, like the semiconductor industry, that they obviously unfairly compete with. So we have to be in it for the long game, too. This is not a short game. This is a long game, and we can't make, immediate decisions off of one market day down.
Scott, what do you think?
I think the market's telling us something that we should all listen to, and that's this. Yes, we've got a trade war with China, but here's the problem, Neil. The longer this goes on, the more it hurts, because anybody that's involved, obviously farmers are a big part of this, but anybody that's got affected by trade with China, your biggest customer, or a big customer of yours, is now going to your competitors. And every day that they're going to your competitors, I don't care if we throw the we're open sign up tomorrow, you're not going to get 100% of those Chinese customers back. They're going to make new relationships, maybe better relationships, maybe cheaper relationships. You're not going to get them all back, and that's what the market is waking up to. We are losing the soybean market to South America, and anybody else in business that has China as a big customer knows that as long as that customer is shopping elsewhere, every day that goes by, you're losing more and more of your customer base that just won't come back.
Now, to follow up on that point, I will go back to you, Rebecca, but on Scott, this point that the president follows the markets very closely, he's very attuned to them, and the Chinese have calculated that he will see the effects of this and dial it back, or blink, as they say. What do you think?
I don't think so. I mean, obviously, he's subsidizing the soybean, well, mostly soybean farmer. The farmers are going to get subsidies, but that can't go on forever. And Mother Nature has been complying for the last 3 or 4 years now. I mean, we've got a lot of soybeans anyway, right. So it's going to continue to hurt. Just Mother Nature's hurt us because the farmer is so efficient. But on top of that, you throw the China thing in there, and the biggest deal is this. Every day that goes by, we're not being able to sell to our biggest customer, and they might make better, cheaper relationships elsewhere, and they won't come back even when we have some sort of agreement. That's the biggest problem, and that's what the market's waking up to. After May the 10th, that was the watershed moment. The market's thinking, hey, this could be a long time, and we might lose these customers.
They flip it around, Rebecca, and say, well, China's in trouble, too, because a lot of U.S. businesses are shifting operations to other points in Southeast Asia. I think in GoPro's case, all the way to Guadalajara, Mexico, to make a lot of their stuff. So I'm wondering if you get a sense that both sides are bracing themselves for life after not getting a deal.
Neil, I agree with Scott, but here's the point I think that is really important. China doesn't want to be China to us anymore. China's got their own strategic long-term plan that says we don't want to be in the low-cost manufacturing and, part supplying business long-term. We want to be basically America. We want to go to the high-tech engineering and all these things. So although the trade war is making all this happen kind of preemptively, ahead of schedule, this is really where China wants to be anyways. They don't want to be this low-cost buyer and this low-cost supplier of all these things to America. So if we have to make new relationships and expand America beyond just China supplying all these things, that's what we have to do long term, because that's what China's on the track to do anyways.
Scott, do you buy the notion that China needs this more than we do? That's been sort of like the prevailing sentiment.
No, and the reason why is that President Xi doesn't have a CNN tracking poll about his popularity that he's got to worry about every day like we do here. Those are the things that he doesn't care about, and let's face it, in the ugliest of times, they'll sacrifice 30 million people to get their point across. We can't do that either. So yeah, it hurts them a lot, but they don't care. They can suffer through it because they will suffer through it, and I think that ultimately, at the end of the day, this thing will end, Neil, when we finally have those supply lines changed from out of China to other nations that trade with us.
All right, guys, I want to thank you both very, very much. Before we get to the